Good morning. Welcome to the latest edition of Talking Ball. It's the 17th of August. I'm Joe Neighbour, joined by Steve and Jamie. Good morning, gentlemen. How you both doing?
Morning, Joe. Yeah, all good. Thanks. Sorry, Steve. I think you're still muted, but yeah, no, all good. Thank you. How's your time away, Joe?
Yeah, lovely. Thank you. Nice and relaxing. A bit tired this morning, but the show
What,
must go on.
what time did you get back?
11.
11 last night.
Oof,
Yeah,
Oh, lovely.
that's commitment coming to the morning stream.
Yeah, exactly.
yeah,
Yeah.
yeah.
Love to see
Got
it.
to be done. Loads to catch up on. Anyway, you both been well?
Yeah, it's but not been too bad. We've managed to
Yeah, all
survive
good.
without you, Joe. It's very
Oh, good.
surprising.
Well, that's
I don't
great
always
to
do.
hear.
There's a bit of a look of relief on your face.
Yeah, absolutely. I haven't checked because I didn't want to see if there was any car crashes going on that I was needing to be worried about. But no, all good. Um, okay, let's get into the latest headlines and then we can move on to some charts. So a few bits out over the last 24 hours. First of all, the German ZEW Economic Sentiment Index dipped slightly further yesterday to minus 55.3 for August from a previous number of minus 53.8. This was slightly weaker than the consensus forecast and the lowest reading since 2008, while the current condition index also edged lower to minus 47.6. Weaker numbers coming out from the US as well. The housing starts declined. It dipped to an annual rate of 1.45 million for July from a revised 1.6 million the previous month, which was also below the consensus forecast of 1.54 million and the lowest reading since September 2020. In terms of inflation, Canada retreated from a 39-year high. The consumer prices actually increased 0.1% for July, with a year-on-year rate declining to 7.6% from 8.1%, and pretty much in line with consensus forecasts. In terms of what's happening in the Far East, Japan, the manufacturing index strengthened to a 7-month high for August, while non-manufacturing index strengthened to its highest level for close to 3 years. So a bit of good data coming out there. In terms of the Reserve Bank of New Zealand, they increased interest rates by a further 50 basis points overnight to 3%. That was in line with the consensus forecasts. And this morning, we've had inflation data out from the UK, and that has jumped to now above 10%. The
Woohoo!
prices index increased 0.6% for July, with a year-on-year inflation rate jumping to 10.1% from 9.4%. This was above the consensus forecasts of 9.8% and is the highest rate for over 40 years. So certainly no signs of that slowing down, which is obviously a concern. I'm not sure it's filtered too much through to markets in a minute. I'm not sure if we're in the sort of summer doldrums and things are just grinding higher. I've got to be honest, I haven't looked at a single chart while I've been away, so I'm going to try and
Get in
muddle through
there.
this next stage,
I,
and
I don't know
hopefully,
whether that means if you just don't care anymore or you just sort of given up listening to these like BS figures that we keep getting pumped out. I
yeah,
mean, we talked about inflation last year. Probably this time last year, Joe, and we felt then it was felt like it was 15% back then.
yeah.
I'm sure this the inflation numbers aren't meant to be like 12 months delayed, are they?
No, I don't think so. I mean, the one thing I have noticed while I've been away is that there's been no let up in this rally in stocks, which
Yeah,
I'm really scratching my head about. Maybe you guys can shed some light on that for us in a moment. But let's have a look at some charts anyway. Steve, do you want
yeah.
to kick us off?
Yeah, it's funny. Jamie and myself were talking about the stock rally, and it feels like there's. We were talking about how volume. We look at volume from a technical perspective, and we're looking at the rally and the volume's dropping off, showing that there's no. It's basically drifting higher. It's like when you have a supply and demand market. Normally, prices drift lower naturally until you get a buyer coming in, but it feels like it's just drifting higher. It doesn't feel
Yeah.
like there's any real sort of like urgency or need to sort of like get invested. There's obviously just nowhere else to put the money. I mean, the interest rates aren't quite at the level that people are thinking, oh, I'll park my cash there, thank you very much, but maybe they're heading that way, who knows.
Yeah, no, I was thinking about this yesterday. So what's going to be the point? I mean, are we waiting for the cost of living crisis to really start biting? Is it going to be the winter before that happens, when people have to start switching on the heating and really seeing the true cost of what that's going to
Yeah,
do to their bottom line, and that's going to stop people spending? I don't know.
Well, the thing is, it's like we're not sort of just people aren't just overspending. They're just like buying the things they need from a day-to-day basis, and that's what's pushing this cost of living. You know, the CPI higher, the RPI higher, all the inflation index, they're all moving higher. And then so yeah, what level does the interest rates have to be to make it sort of I think, oh well, interest rates are like now 5-6%, but if cost of living is like still 10%, it's still a net loss. So
Yeah.
does money stay in sort of indices? Don't know. Anyway, let's carry on. Bitcoin just continues this that sort of like this drifting higher mode, I'm going to call it, because again, it doesn't feel like there's any real substance to the sort of like rally. I think it's just a sort of like just a technical thing, as I've spoke about before. The Bitcoin market or the crypto market is just a buyers only market. No one has any need or reason to sell Bitcoin, and that's why it has this natural support, which you don't get in other markets. Anyway, levels to watch. We've just bounced off this upward trending support line. There's a little bit of like a ending wedge formation going on. We've got the 21-day moving average. We've got the Ichimoku cloud. There's a little bit of support around here. But we still can't manage to get above this 25,500 level. The real sort of resistance for me is between 29,000 and 33,000. So between this 38.2 and this 50% Fibonacci retracement level from the sell-off from 28th of March all the way down to 18th of June. That's where we got those numbers from. And commodities, gold had a really decent sell-off on Monday. Tuesday, we got a little bit of follow through, but not a great deal, and we haven't really done anything today. It feels like we've now posted this really nice downward trending resistance line. We've got the cloud as well, so the trend remains on the downside, but it wouldn't take much to really turn this market around. It's hit this supportive base that we highlighted a long while ago now, between 1675 and 1695, and reacted really strongly off it. I feel we still need to have a retest, or at least a little bit of a look down towards that 1700, 1730 level, and see what happens there before we can say there's quite a solid base in place. So still a long way to play out. Support coming in today around about the 1770 level, resistance at 1783. We're trading somewhere in the middle of that, and above obvious resistance is at 1800, 1808, 1815, 1830. So nice amount of resistance above. Similar sort of price action on silver, although it's performed a little bit better than gold. Yesterday we saw a bit of a bullish hammer candle, which is a little bit more positive also. So that could be a sign that the sell-off yesterday was a little bit overdone, and potential for a further move back higher to retest the resistance. Resistance coming in at around about 2085 to 90. Support below, it stalled just below the $20 level, 1993, and we're trading at 2014 now. So 21-day moving average coming in at 1986, and yeah, just slightly on the positive note this morning. Natural gas has pushed aggressively higher yesterday. We had the sort of, there was a bit of a build up while oil was coming off. We continue to see the market, the natural gas market, tick upwards, and we've highlighted this area of resistance around about the 940 to 960 dollars level, and yeah, had a nice explosion upwards yesterday. Decent rally from a low of 877 to a high of just around 940, and still on the front foot this morning. So expecting to see some opportunist selling coming in at this level. Yeah, natural gas, energy crisis, all of that leading to this demand on that commodity. Crude oil actually seems to be doing the opposite at the moment. It's still under pressure. We're looking at WTI crude oil here. Levels to watch. Yesterday we got down to the lowest level we've seen since 26th of January, which yeah, seems like a long way away. So crude oil trading currently at 86.72. Support coming in just above the $85 level, and yeah, really sort of like in this downward trend. 21-day moving average coming in around about where our previous support, which has now turned into resistance, at 92.27, and above that we've got resistance also at 94.14. But yes, it continues to be on the back foot with WTI crude oil. Brent, very similar. That's bounced off 91.20, so that's the level to watch. Again, that's a level we haven't seen since the middle of Feb. So and obviously the premium that Brent is trading over crude, the main reason that that's looking a little bit more better, has performed a bit better on a percentage basis. Overall, yeah, that's still trading just under $6 premium. So definitely something to watch going forward. Resistance for that coming in just under the $100 level. Nice and big round numbers for Brent. I think that's it for me.
Lovely stuff. Who was covering FX and indices while I was off?
Oh, Jamie, is it a good thing or a bad thing?
I don't know. I was just going to wait. I wanted to kind of get your view of where we're at. Obviously, I haven't looked this week, and
Yeah,
I would
I
certainly
did
it's
a little bit.
appropriate. Yeah.
Yeah, no, it's mainly that obviously we were seeing a little bit of movement in the commodities, and that was mainly driven by the dollar, sort of what was going on in the dollar market. So look at the
Yeah.
dollar index, we've seen a nice little rally higher over the last few days. So that was the only thing that really stood out for us.
Yeah. Okay. That's cool. So, I mean, yeah, it still looks like the dollar index is moving nicely. Obviously, we've had this corrective channel. We've seen a nice breakout from that by the looks of things on the 15th of August. The pullback fell into some support around the 50% fib. Just it did dip a bit lower and come up just shy of the 61.8. So, all in all, pretty healthy stuff, pretty healthy corrections, and looks to be marching higher. I don't really see anything changing there. There was a bit of indecision yesterday, but I mean, I'm really interested in this candle here. A nice big breakout from this bearish channel, just a corrective channel, and looks to be heading higher. So no signs of that slowing down. If we take a look at things linked to that, I mean, if we look at cable, just looks pretty range bound. To be honest, it's the same price it was before I went away by the looks of things. So not really gone anywhere. Really tight range there as things stand. Seems to be finding some support at 120.56. Overall, the trend remains bearish. So went back against lower prices there. Did draw some sort of wedge on the chart there. Didn't really get any sort of big impulsive breakout from that. So I'm going to ignore that. And maybe we're in the process of forming some sort of bottom. I'm not sure. Too early to tell. But given the strength that we're seeing in the dollar index, I would continue to favour the US dollar as things stand. Take a look at the euro. We can see that rallied into a really nice area of resistance here at 103.40, and it failed. We did try and have a couple of attempts at breaking above that level, but it hasn't worked out. And we've seen prices decline. This big red candle here from the 15th just really signifies that and suggests that prices are going to continue heading lower to retest those lows that we saw around the parity figure. Looks to be maybe some sort of pennant or flag pattern that's formed here on the daily chart, and looks like lower prices are set to continue. Obviously, we talked about parity, a good few weeks ago now. It wasn't really much of a technical level as such, just more of a big psychological one. And it really did do a pretty good job. It did attract speculative interest. Maybe it will do so again, but I think we're kind of done with that now. So I don't really see it doing much on the downside now that we have breached that level. So I'd be looking for a test of these lows here that we posted on the 14th of July, which is at 99.52. And of course, if that breaks, it looks like we're going to continue moving lower. I'm not going to go into too much detail on other FX markets just because I need to sort of get myself set really and have a look at a few of those in a bit more detail. So we'll come back to those tomorrow. But let's take a look at some of the indices and see what they're up to. As we discussed at the outset of the show, they continue to grind higher. This is DAX. Posted a short-term double bottom here. The measured move of that target was at 13,663. The 161.8% extension of that comes in at 14,057, and we're fast approaching that level as things stand. Really has been pretty one-way traffic on the upside for a good few weeks now, which I guess there's got a few people scratching their head. Do they believe in this rally and start to back it and start to put capital to work, or do we think about fading it here? I don't know. We'll come on to your general view in a moment and have a look at some stocks in the US as well. But for me, it's not been well supported from a volume perspective. If you look at some of the experts or so-called experts, big banks and everything, there's a lot of skepticism towards this rally. So I'm a little bit unsure myself, but prepared to change my mind if I need to. Let's take a look at Nasdaq. Again, similar situation, broken through this short-term downtrend. No signs of it slowing immediately in the short term. We are fast approaching a 50% fib level from this entire move here. That comes in at 13,902. We've got a bit of resistance there I've highlighted as well at 13,953. So I think into that area there, I'd consider fading it from a short-term perspective and looking for a speculative move lower. Again, pretty sharp move to the upside, but is it all based on fumes? Is there enough participation in that to keep it sustained and to see prices move higher? We'll have to wait and see. S&P 500, so that broke out of this bearish channel, took out this area of resistance that we had on the chart between 4106 to 4136. It's also sliced straight through that 61.8% fib level. That's from these highs here on the 28th of March. Let's actually drag that back to see if we've got any other fib levels close by. That brings the 61.8% level a bit closer actually at 43.66. So that's the entire down move from the highs that we posted back in January earlier this year. Just get rid of these, redraw that actually because I like that. So yeah, maybe a band of resistance between 4366 to 4438 on the S&P 500. That's where I'd be potentially looking to fade this up move, but of course I'll be keeping an eye out for any sort of reversal candles to potentially form as well. Okay, let's look at the FTSE 100. That has taken out the 78.6% fib level that we had on the chart at around 75.23. Still looking pretty strong overall, being helped by dollar influence. Also, we've got banks, a number of banking shares in the FTSE 100, so they'll be being helped by the higher interest rates or the prospect of higher interest rates. And of course, we've got a lot of energy companies in there as well, mining and oil. So that's keeping the market propped up, and it continues to outperform. It's actually not far away from its highs that we posted earlier this year at 76.87. So good chance we could probably see that retested in the next few weeks or so if the market continues to rally in the way that it has. So that was my best effort at going through some of those charts. I will hope to be in better form tomorrow once I've had a chance to reset my charts and have a look at things and form a view. But in the meantime, Jamie, I'll hand over to you. You can talk us through some stocks.
Great, thank you, Joe. Right, where are we here? There we go. Got my screen up. This isn't the stock I want to start with. We want to start with our biggest gainer and loser. Our biggest loser is here. This is ALBO, Alberio Pharma, down 27.4%. I need to just change my screen here. I can't really see what I'm looking at. There we go. Yeah, down 27.48%. Looks like an earnings one. Let's just quickly check that out. There you go. Q2 net loss of 2.04 per diluted share late Monday, compared with a loss of 1.90 per share a year earlier. Yeah, moving downwards quite nicely. Our biggest gainer though, I'm looking at Bed Bath and Beyond, and this has just had an incredible squeeze over the last couple of weeks. And I mean, you see yesterday's volume, it was trading crazy volume compared to what we've seen. I mean, the back end of July, this was trading at an average of about where are we? About 14 million shares. Yesterday, it traded at 395 million shares. So yeah, this real squeeze out. I don't think this was the biggest gainer on the day, but if you look at how this has been over the last, let's say, since 29th of July, it got up to over 460% since then. Obviously, it did sell off a bit towards the end of the day, but closed, 29% higher in the day, and it's had this real squeeze up. So an interesting one to watch there.
What's that being put down to, Jamie? Is that down to like a Wall Street bets type move or a short covering move?
I think it's a Wall Street bets type thing. I mean, let's have a little look. Because I think there's a lot of short interest on this. I did have a little read. I'm pretty sure it's all Wall Street bets, you know, doing their thing again.
Yeah, there's one there.
Oh,
Social
was it
Buzz
there?
down, third one down.
Ah, there you go. Meme stock favorite, Jimmy. That's not it. Yeah,
But
I mean,
definitely. Right, okay.
uh, so I mean, nothing too specific on it, but it does appear to be the case. We did have a bit of a squeeze while you were away, Joe. I think it was while you were away on AMC and GME as well, which we'll come on to in a sec. Just have a look at how they're doing. But yeah, pretty wild move there on Bed Bath and Beyond. Looking at our heat map for yesterday, nothing really to note. Again, a lot of grey across the board and those light greens and light reds. The one thing of note for me was retail trade. We've got Walmart and Home. What is that? Something Home.
Depot.
Um, Home Depot. That's it. Both up 5 and 4% respectively. And I think that came off the back of Walmart earnings and it dragged everything else up. But we can have a quick look at that as well. Home Depot sat right here, so this actually reported earnings too. A nice break above this resistance level we had here. Earnings looks like a slight beat on earnings, nothing too crazy, but that was driven higher as well. I think because of Walmart. If we try and where's this Walmart? So yeah, there we go. This gapped up above this previous resistance here. Obviously, Walmart was one I think we looked at back in May when the earnings took a tumble in the other direction. But yeah, gapped up yesterday, 5.11%. A pretty decent move there off the back of earnings, and that was what sparked the move in Home Depot too. We'll look at a couple more. There's nothing too crazy, but I will check out GME because that was up just over 6%. As you can see, we did have this slight squeeze. So in 2 days, it was up about 30%. So it was quite a nice move there. Volume's really starting to pick up. You can see the volume yesterday down here, trading at 23 million shares. So I mean, really, that's just a fraction of the size of the move we saw in Bed Bath and Beyond. It was trading 350 million, but still, you know, up 6% on the day. At one point, where do we get up to? From the start of the day to the high, about 16%. So a nice move there. AMC, we'll quickly check that as well because that was the one we had a real nice squeeze on a few days ago. That was up at one stage over 50%. And is still maintaining these higher prices. So we'll see if that one can continue to move up. If we do, I think the next technical resistance we've got is around this 33 level here. So keep an eye on that. What else did we want to look at? Meta platforms. We did get out of this initial tighter range we saw down here. Finally broke above that, but now we're coiling again. Pretty low volume as well, but coiling at this resistance level here. Perhaps waiting for a bit of a break upwards. But yes, still in a pretty nasty downtrend, but maybe we are getting a slight bottom here. We'll see how that plays out. What else are we looking at? Micro looked at that yesterday, nothing too much to report. Still looking for that gap fill. We do have another gap a bit higher. I think we mentioned that too. So 2 levels to potentially look at there. Nvidia, we've looked at this a couple of times as well for this bottoming inverse head and shoulders we see forming here. What I'd really like to see at this kind of resistance point is a bit of a coil. We don't want price to get overextended before trying to break out. And it looks like we've got earnings coming out for this on the 24th of August. So that could be the catalyst. So if we get a bit of a coil pre-earnings, which wouldn't surprise me, that's pretty natural kind of price action pre-earnings anyway. That could be the move that gets higher. So that reports earnings next Wednesday by the looks of things after the close. So keep an eye on that. We are getting a coil on Pinterest. I think this is Pinterest, isn't it? Yeah. We got the nice earnings bump upwards. We've had a bit of a post-earnings drift that we sometimes see. Let's see if we can break this resistance we saw back throughout April and May. There was a couple more European stocks ones to look at. Avacta Group, we've checked this out a couple of times recently, but this is coiling quite nicely at the top end of what I see as a bit of a flag pattern. This certainly has potential to break higher. I think at least get back to this. We've got this is a 38.2 fib, but we've also got this resistance here as well at about 140 pence. So looking for a breakout there. Keep an eye on that. Earnings there coming up at the end of August too. Cineworld was down 38% yesterday off the back of earnings. Let's see if we can find a bit more information on that. Nope, nothing there. not seeing. There's a lot of reading to do. I haven't actually seen the new Top Gun, but that's not the point of why I'm here.
You haven't seen the new Top Gun?
No, I've heard it's really good. So I am. It's actually one of those
Oh
things
my
that
dear.
I haven't
This
seen the
is
first Top Gun.
I haven't seen it either.
oh dear. It's just I don't know what the world is coming to. I think we
It's a
better
bad
just
job.
shut up shop now and
No,
give it all in. You've got to
no,
see the new Top Gun, one of the best films ever made, and
yeah.
Elvis. You
Oh
must have
yeah.
seen Elvis, obviously.
Obviously not.
I haven't seen Elvis either.
Oh my God, what are you kids doing?
I'm working really
Joe,
hard.
you're included in that. I can't. Have you seen it?
No.
What's the matter with you? You just
I
watching
haven't got the
football or
attention
something?
span to sit there and watch it. 90
I
minutes is as much as I've got.
Oh,
Yeah,
is
I
it? Well,
kind of
watch it
feel
in two
that.
parts. What they should have broken down into two parts for you young whippersnappers.
Whippersnapper. But it's a film that my friends have said is great and my parents have said is great. So when you can get those two different demographics, it must be doing something right. So it will be something I eventually watch. But regardless, it's not helping Cineworld. It's down 36.9%, and really struggling. I think that So this is actually off today. This is training, 17th. So look at the volume we've already had today. In just 28 minutes. I think it's 28 minutes, right? Yeah, a really tough earnings report there. There's a couple more ones to take a quick look at. NatWest, we missed earnings on NatWest, but that had a really nice bump up. I mean, this is a pretty gappy stock anyway, but this gapped up. We've got dividends and a split coming for this before the end of the month, so keep an eye on that. Do we want to look at S4? Not really. This did have a gap down. I'm not sure if we talked about this in July, but now it's at a long-term support level. I mean, going all the way back to 2018 and then the COVID pandemic. We're back around there again, and it has responded off that support, and the volume's obviously picking up there as well on the weekly chart. So not too much to report on a lot of the US stocks yesterday, other than Walmart and Home Depot. But let's see what today's got in store.
Nice one, Jeremy.
Superb. Well done. Okay, so let's move it on to the gun to the head challenge. So this is where each of us pick a trade idea live on the video. Each of the ideas must have a stop and a target. All the ideas are placed at market and they will expire at 9 p.m. UK time or when the stop or the target is hit. It's just a bit of fun. Just sort of testing our abilities as technical analysts to try and spot patterns very quickly and hope that they play out in a positive way between now and 9 o'clock this evening. If anybody wants to check these trade ideas out, you can do via our TradingView profile. They're all there for everybody to see. We're not hiding, or burying these ones that don't work. We're very transparent guys here, and just like to show it how it plays out. So yesterday we had a couple of trade ideas posted. We looked at US dollar CAD. I believe this was Steve. Is this your trade idea from yesterday?
No, this is one I've just posted now, Joe.
Right,
I've
okay.
got the
I've just
gun.
ruined it, haven't I?
Right.
Yeah, it was a little
Gun on the gun's
surprise.
head. Right, okay. So
Yeah,
gold
I'll
was
tell
the
in
trade you
gold,
did
yeah.
yesterday. So yeah, that was a nice little bearish pennant that you highlighted there on the intraday charts, and I think that played out quite nicely. If we click play,
Yeah, it moved to the downside. Got a little bit of R out of it.
yeah. So you were nicely on side with that, about 0.8 R, I think,
Yeah.
from what I saw.
Yeah, just didn't get the follow through. So maybe we've got a little bit of a turnaround in gold today. I don't know. I was going to actually go against this trade idea today, but then I plumped for dollar CAD in the end.
Okay, and Jamie, yesterday you were trading platinum, selling platinum by looks of things. So looking for a breakdown there, which didn't come sadly. It looks like you got a nice little wick lower initially,
Yeah.
but again, no follow through, which I guess is a lot of what we're seeing in the markets at the minute. Not a lot of follow through in anything in quite choppy conditions.
Yeah, that's all good.
Yeah.
Okay, so 3 fresh ideas coming at you today. Steve, you've already got one ready for us, and I've indicated what it is. So let's go and dig into that, and you can talk us through it.
Yeah, it was a bit. I actually pressed publish button as we came into it. I thought I shouldn't really have done that because by the time I talk you through it, it might be stopped out. It's a very sort of really sort of struggling with on indices. Didn't really want to touch them. The only thing I thought was maybe gold. Still feel bearish on oil. So yeah, and I didn't want to get involved in crypto. So just take a look at the dollar CAD. Really, sort of like I feel like we're going to get a little bit more dollar strength over the next few days. Seen a nice little bottoming formation. We're trading above the 21-day moving average. We're still supported by the Ichimoku cloud to a certain extent on the daily chart, so that felt good. And the 4-hour candle for me is pretty positive. It's a bullish outside candle, pushing nicely into the cloud resistance and looking to take that out in shortly. On the hourly chart, I was only looking for a small move up, thinking about the intraday side of things. So I put the stop just below the low of the hourly candle that we're in at the moment. So that's from 8 o'clock to 9 o'clock, that candle. Put the stop just below there. Otherwise, if I put it down here, my target would have been a bit more further higher. So yeah, looking at that from a short-term basis, nice little bullish outside candle on the hourly, 4 hourly, and daily looking constructive. And so I've gone for that, published it, done.
Lovely. Good luck, Steve. Jamie, have you got one ready?
I'm just finalising mine. Do you want to go with yours, Joe?
Yeah, sure. Okay, I'm actually going to sell oil. So listen to obviously what the guys had to say. Been away from the markets for a week. Really like what Steve was showing on the oil charts. Look to be heading lower. Certainly looking at the daily chart, looks like a big top has formed on this. This is my own version of it. Broken through a support here at 92.38. The first close below that we've seen in some time. So I'm going to look for further downside on this. I've got the hourly chart up here. We're breaking down through some support here at 93.31. We've seen a nice retest over the last couple of hours. And for me, I think that's going to start heading lower. So 92.33 is the current price. I'm going to place a stop above the highs that we've posted over the last couple of hours at 93.31. And I'm going to target a move down to 88.74. If we scroll back to the left-hand side, we have to go some way back, but there was a low there. I didn't actually capture the exact low. My magnet didn't pick that one up, but we'll go with this anyway, just ahead of that support there from the low that we posted back in February earlier this year. So looking for a 3.97 risk reward on that. And
All
hopefully it
inventories
plays
out
out.
as well, Joe.
Yeah, oil inventory's out later, so
So
that could give it a
me
bit of
and
a
you
bump.
will be either smiling or not smiling. Dollar CAD obviously impacted by oil, and obviously you're going short of oil. That's actually the one idea during what on the week you're away that played out really nicely for us, where you hit
Yeah,
target on that.
I saw that, yeah.
Yeah, so that was hopefully that can continue.
Let's hope so. Okay, so that's going to be published up now. If anybody wants to check it out or follow its progress throughout the trading day, please feel free to do so via our profile, which is signal_center. Jamie, over to you.
Hello. I also wanted to sell crude oil, and it actually makes me feel good.
Do
We're
it,
seeing
do
the
it.
same things in the market. No, absolutely not. There's no chance I do it now. I
What?
did have a, I did, look, I had a backup. I had contingency, but I just thought I'd show this because it's nice that we're kind of seeing the same things. Make nets. But does make me feel slightly inept is my other option was looking to sell gold, which goes against what you were just saying, Steve. But what I'm kind of seeing here is obviously we've had this big spike down that Steve's talked about last couple of days. Since then we've had a bit of consolidation, but what's really interesting me over the last few hours is price couldn't get back up to that resistance we saw. So the sellers are starting to step in slightly earlier again. I'm hoping that pressure breaks this short-term support we've seen at about 1773, and we do see a bit of a move down to a lower support. So I'm going to take a bit of a punt on this today, keeping the stop above this recent swing high and hope we get a move lower. So I'm going to sell gold at current price, which is 1775.16. There we go. Take profit. I want to make this a round number. I don't need points. Let's just make it 1756, and we'll keep the stop at 1783. So that gives us a 2.44 risk reward. Hoping to see a bit more of a sell-off in gold today.
Nice one.
Lovely stuff. So 3 new trade ideas for people to check out there if they wish. In terms of what's happening later today, we do have some data out. We've got US retail sales at 1:30, and as Steve mentioned, we've got the US crude inventory numbers as well. They're out at 3:30. And then at 7 o'clock tonight, we've got the US Federal Reserve minutes. So expect some volatility around that time into the US close. and overnight we've got some jobs numbers from Australia. Okay, that is pretty much that, unless you guys have got anything further to add.
No, all good.
No, all
Lovely.
good from me.
Thank you for everybody for watching, and we'll be back tomorrow morning.
Cheers.
Have a
Thanks,
great day.
everyone.
Goodbye.